What's up, investors? Iggy here, and welcome back to the Investing Iguana. Today, we're diving deep into the remarkable financial performance of LHN Limited, a real estate company that has been making waves in the industry. Prepare to uncover the driving force behind their staggering 89% revenue surge in the first half of 2024, a feat that has caught the attention of investors and analysts alike. In this comprehensive video analysis, we'll dissect LHN's thriving co-living business under the Coliwoo brand, which has emerged as the star performer. With a portfolio of over 2,100 co-living units spanning Singapore and overseas markets like Myanmar, Cambodia, and China, LHN has achieved an astonishing 92% occupancy rate. This impressive occupancy level, coupled with stable rental income, has propelled the co-living segment's revenue to soar by nearly double, reaching an impressive 20 million Singapore dollars. But the growth story doesn't end there. We'll also explore LHN's diversified revenue streams, including its facilities management arm, which saw a 14% increase in revenue thanks to securing more contracts for services like cleaning, security, and car park management. Additionally, we'll delve into the company's industrial and commercial property holdings, which experienced a slight dip in revenue due to the expiry of some master leases last year. Join me as we analyze LHN's financial performance in depth, dissect the key drivers behind its success, and assess the company's prospects in the co-living and real estate management space in Singapore and the region. Trust me, this is an earnings update you won't want to miss. For the first half of the financial year 2024, LHN Limited reported some impressive financial results that have caught the attention of investors and analysts alike. The company's revenue skyrocketed by a staggering 89% year-on-year, reaching an impressive 55 million Singapore dollars. While the core profit figure of 13 million Singapore dollars marked a 15% decrease compared to the previous year, the overall performance was undoubtedly solid and highlighted LHN's growth trajectory. The true star of the show, however, was LHN's co-living business under the Coliwoo brand. This segment experienced a remarkable surge, with its revenue nearly doubling from the previous year to reach an impressive 20 million Singapore dollars. This impressive growth was fueled by two key factors: high occupancy rates and stable rental income. LHN's co-living portfolio has expanded rapidly, with the company now boasting over 2,100 co-living units across Singapore and various overseas markets, including Myanmar, Cambodia, and China. What's truly remarkable is the astonishing 92% overall occupancy rate achieved across these units, a testament to the strong demand for co-living spaces. The success of the co-living segment can be attributed to LHN's strategic approach and the growing popularity of co-living arrangements among urban dwellers seeking affordable and flexible housing solutions. By offering a unique living experience that combines private living spaces with shared amenities and a vibrant community, LHN has tapped into a lucrative market segment that shows no signs of slowing down. To give you a better perspective on the scale of LHN's co-living operations, the company now boasts an impressive portfolio of over 2,100 co-living units spanning across Singapore and various overseas markets, including Myanmar, Cambodia, and China. This widespread presence not only showcases LHN's commitment to expanding its co-living footprint, but also highlights the growing demand for such housing solutions across different regions. Now, here's the real kicker: the overall occupancy rate across these 2,100 co-living units is a staggering 92%. Let that number sink in for a moment. An occupancy rate of 92% is an incredible feat, especially when you consider the sheer number of units we're talking about. This statistic alone speaks volumes about the overwhelming demand for co-living spaces and the appeal of LHN's offerings. Such a high occupancy rate is a clear indication that LHN has struck a chord with its target audience, providing a living experience that resonates with the needs and preferences of modern urban dwellers. By offering a unique blend of private living spaces, shared amenities, and a vibrant community, LHN has successfully tapped into a market segment that values flexibility, affordability, and a sense of belonging. While the co-living segment stole the spotlight, LHN Limited's impressive financial performance was driven by multiple growth engines. The company's facilities management arm also contributed significantly, with a 14% revenue increase compared to the previous year. This growth can be attributed to LHN securing more contracts for various services, including cleaning, security, and car park management. However, not all segments experienced an upward trajectory. Revenue from LHN's industrial and commercial property holdings took a slight dip due to the expiry of several master leases in the previous financial year. This temporary setback, however, does not dampen the company's overall prospects, as the management team has proactively devised plans to recycle the capital from these expired leases into new growth areas. LHN's diversified business model, spanning co-living, facilities management, and traditional real estate holdings, has proven to be a strength, allowing the company to navigate market fluctuations and capitalize on emerging opportunities. The management's strategic approach to capital allocation and their ability to identify and pursue new growth avenues demonstrate their commitment to driving long-term value for shareholders. Speaking of growth, LHN Limited has some exciting projects in the pipeline that are set to further solidify its position in the co-living and real estate management space. One of the most highly anticipated developments is the opening of 2 new co-living properties along the prestigious River Valley area in the second half of 2024. These properties will add even more units to LHN's already impressive co-living portfolio, catering to the growing demand for affordable and flexible housing solutions in prime locations. But that's not all. LHN has also forged a strategic partnership with MOH Holdings, a move that showcases the company's diversification efforts and commitment to serving various segments of the market. Under this partnership, LHN will provide lodging facilities for approximately 700 healthcare professionals, addressing the housing needs of this essential workforce. The addition of these new co-living properties and the partnership with MOH Holdings not only expands LHN's footprint, but also demonstrates the company's ability to adapt to changing market dynamics and identify lucrative opportunities. By catering to different segments, such as young professionals seeking co-living spaces and healthcare workers in need of convenient accommodation, LHN is positioning itself as a versatile and forward-thinking player in the real estate industry. Now, let's shift our focus to another crucial aspect of LHN's financial performance: dividends. The company has proposed an interim dividend of 1 Singapore cent per share, which is on par with the interim payout from the previous year. While this may not seem like a significant amount, it's important to recognize that consistent dividend payouts, even modest ones, can provide investors with a steady stream of income. For income-oriented investors, LHN's dividend policy can be an attractive proposition, especially when coupled with the company's impressive growth trajectory. By maintaining a stable dividend payout, LHN demonstrates its commitment to rewarding shareholders and fostering long-term investor loyalty. Overall, I'm genuinely impressed with LHN's performance, particularly the remarkable growth witnessed in their co-living segment under the Coliwoo brand. It's evident that co-living has emerged as a major focus area for the company, and they're executing their strategy with precision and foresight. The co-living market has been gaining traction globally, driven by changing lifestyle preferences, urbanization, and the desire for affordable and flexible housing solutions. LHN has positioned itself at the forefront of this trend, capitalizing on the growing demand for co-living spaces in Singapore and beyond. There you have it, folks, the inside scoop on LHN Limited's explosive revenue growth, driven by their booming co-living business and savvy real estate management strategies. As always, I encourage you to do your own research and due diligence before making any investment decisions. But if you're looking for exposure to the co-living and real estate management space in Singapore, LHN Limited is definitely a company worth keeping an eye on. Don't forget to smash that like button if you enjoyed this video, and hit the subscribe button to stay up to date with all the latest investing insights from the Investing Iguana. Drop a comment below and let me know what you think about LHN's performance, or if there are any other companies you'd like me to cover. Until next time, stay wealthy, my friends.